Ladies and gentlemen, good day and welcome to the Alkem Laboratories Limited Q4 FY26 earnings conference call hosted by Motilal Oswal Financial Services Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Tushar Manudhane from Motilal Oswal Financial Services. Thank you, and over to you, sir.
Thanks, Torvin. Good evening and a warm welcome for fourth quarter FY26 earnings call of Alkem Laboratories. From the management side, we have Mr. Sandeep Singh, Managing Director, Dr. Vikas Gupta, CEO, Mr. Nitin Agarwal, CFO, and Ms. Purvi Shah, Head of Investor Relations. Over to you, Purvi.
Thank you, Tushar. Good evening, everyone. On behalf of Alkem Laboratories, I welcome you all to our Q4 and FY26 earnings conference call. We are happy to have our Managing Director, Mr. Sandeep Singh, on the call today to engage directly with all of you, and he'll address any queries related to the future strategy, leadership transition, and future outlook. Earlier today, we announced our financial results along with the press release and investors presentation, all of which are available on our website and also have been filed with the stock exchanges. We hope you've had an opportunity to review them. Before we begin, I'd like to remind everyone that this call is being recorded and the audio recording and transcript will be made available on the stock exchanges and our website shortly after the conclusion of the call. Please note that today's discussion may include certain forward-looking statements, and these statements should be viewed in conjunction with the risks and uncertainties associated with our business and the environment in which we operate. With that, I would now like to hand over the call to our MD, Mr. Sandeep Singh, for his insights. Over to you, sir.
Thank you, Purvi. So, good evening, everyone. FY26 has been a landmark year. We crossed 3,000 crores of EBITDA, so it's been a fantastic year. And I will let Vikas fill in more details, but I would just like to say we're even excited for the future. And it has been a great year. We launched GLP-1, where we are doing extremely well. And both medtech and biosimilar, bio-CDMOs continue to be our growth areas. With this, I think it's Vikas, you please take over. Thank you, Doctor. And I would like to place on record that Dr. Vikas is going to now kind of proceed from Alkem, and he's done a fantastic job and he will be missed. And I'm sure that you all will join me to wish him all the best for his career. Thank you.
Yeah. Thank you so much, Mr. Sandeep Singh, and thank you everyone for being on the call. And I must, at the beginning, thank you all for all the patience and support and guidance that you have been, during my tenure at Alkem, and I really value and cherish, my journey over here. As I speak about the Q4 and the annual results for the financial year FY26. It has been a landmark year for Alkem, and it has been marked by a very strong broad-based growth. We have had a record profitability. We have continued our progress across our strategic priorities. So I'm happy to share that we delivered our highest ever EBITDA during the year, with surpassing 3,000 crores, on an annualized basis, reflecting the strength of our business growth strategy, disciplined execution, and operational excellence. Our performance was supported by a very healthy momentum across both the India branded generic market as well as the international businesses. In India, we continued to outperform the market across several key therapies, with strong traction in chronic segments and sustained brand performance. I'm particularly pleased with our new products performance and the launches, that we have done. It has been outstanding during the year, and a key highlight has been the successful day one launch of semaglutide in the month of March 2026. While these are very early trends, but I'm happy to share that in the most recent IQVIA report, we could garner a unit market share of around 11%, and we expect it to go up, even further in the coming months. So it has been a strong launch that we have done. Internationally, both the US as well as non-US businesses delivered very strong growth, supported by the new launches, market expansion, and steady execution. Importantly, the year also reflected the benefits of an improving business mix. We got operating leverage and continued our cost discipline, which contributed to a meaningful margin expansion. I will now present the key financial highlights of Q4 and FY26. In Q4, our total revenue from operations was 36,033 million, with a YOY growth of 14.6%. India sales were 23,245 million, with a YOY growth of 8.8%. But if you look at our branded generic business growth, that has been close to 10%, international sales were 12,223 million, with a YOY growth of 25.4%. EBITDA was rupees 5,174 million, resulting in an EBITDA margin of 14.4% for the Q4 FY25 versus a 12.4% for Q4 2025. It is 5,174 for FY26 Q4. EBITDA grew by 32.2% YOY. R&D expenses for Q4 FY26 were 2,293 million, which is 6.4% of our total revenue from operations. But on an annualized basis, it is pretty much as per our guidance. Profit before tax was rupee 5,578 million, with a YOY growth of 40.7%. Exceptional items for the quarter included rupees 602.7 million incremental liability towards gratuity and leave encashment for the past service cost, following finalization of central rules under the labor codes, and rupees 747 million impairment of real estate investments. Net profit was 2,365 million. According to IQVIA data, for Q4 FY26, the company registered a growth of 11.1% YOY versus the IPM, which grew at close to 10%. Acute segment reported a growth of 10% versus IPM, which grew by 7.7%, and chronic segment reported 16.1% versus the IPM growth of 13.6%, which is almost a 250 basis point outperformance. We have outperformed in 6 key focus therapies, which are meaningful for us in terms of, the internal value, which is GI therapy, vitamins and minerals, pain, anti-diabetic, respiratory, and dermatology. For FY26, the key financial highlights: the total revenue from operations stands at rupee 147,123 million, with a YOY growth of 13.5%. India sales were rupee 98,514 million, with a YOY growth of 9.7%. International sales were 46,810 million, with a YOY growth of 22.5%. EBITDA was rupee 30,052 million, resulting in an EBITDA margin of 20.4% versus a 19.4% in FY25, and EBITDA overall grew by 19.6% YOY. R&D expenses for the whole year were rupees 6,173 million, which is 4.2% of the total revenue from operations, versus rupee 5,620 million in FY25, which was 4.3% of the total revenue in that year. Profit before tax after exceptional item was rupee 28,709 million, which is a YOY growth of 13.6%. There were exceptional items for the year, and I think subsequent details, can be given by the finance team, by Nitin in the later call. The outlook as we enter FY27, we strive to drive the growth and profitability with continued focus on strengthening execution, improving the overall portfolio mix, and expanding our differentiated pipeline, thereby creating long-term value through disciplined investments and operational excellence. While we remain optimistic on sustaining our momentum in FY27, the current geopolitical environment and evolving the global supply chain dynamics have resulted in increased logistics costs, along with some pressure on APIs and the packaging materials. We are continuously watching these changing trends. These external factors may lead to some near-term headwinds. However, we are closely monitoring the situation and trying to proactively manage our supply chain. We are confident that with our strong capabilities and adequate inventory built up, we are well positioned to mitigate the potential disruptions and ensure continuity of operations. For FY26, our tax rate has gone up, and we can have the subsequent details, on the reasons for the same, later during the call. With this, I will open the floor for Q&As.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to please use handsets while asking a question. Ladies and gentlemen, we will now wait for a moment while the question queue assembles. Our first question comes from the line of Sukrit D. Patil with Eyesight Fintrade Private Limited. Please go ahead.
Good evening to the team. I have two questions. My first question to Mr. Sandeep is, what type of strategic levers are you prioritizing in FY26-27 to expand Alkem's domestic formulation leadership and accelerate growth in chronic therapies and manage risk from regulatory pricing pressures and global competition? That's my first question. I'll ask my second question after this. Thank you.
Yeah, so I think there is no strategic lever for 26-27. Every year we don't have a strategic lever. We are continuing on whatever strategy we had decided last few years, and that's paying good yield. I think Vikas can go into depths, but for example, GLP-1, we are doing extremely well in semaglutide. So things are working. What pricing risk we do to mitigate, I think nobody in the world can do that because the pricing is going by regulations which we have to follow. Vikas, over to you.
Yeah, sure. Thanks. So Sukrit, I think I've always maintained that domestic is one of our, topmost priorities. So one, we have strengthened our new launches, a lot in our domestic business. I spoke about a few years ago, we had restructured the businesses and that's paying very good dividend in terms of the overall growth that we are seeing across therapies, as far as domestic business is concerned. We recently launched semaglutide, and I think that will be one of the biggest priorities for us. In the coming year, we are seeing very good trends, as far as, and that will propel our overall chronic growth, in addition to, and that will contribute to even the India growth overall. We have also looked at strategic expansion of manpower as far as, India business is concerned, domestic business is concerned. So we have added people wherever, we are very bullish about growth and largely on the chronic side, because that is where, our entire focus has been. And I was just looking at the trends. If you look at the definition of acute and chronic, then today our chronic business as far as branded generic business is concerned, we are close to 22% of our business is from chronic, and which is, if you see our last 3 or 4 years trend, every year we are improving it internally by at least 1%. And we see with now newer and newer products coming in over a period of time on chronic, we expect it to get strengthened, even further. So I think it's a journey, and we are very consistent, as Mr. Sandeep Singh just mentioned. So this is, we are just playing on the whole. We'll focus on execution of whatever strategy we have planned out for domestic business.
My second question to Mr. Agarwal is, again, a forward-looking one. What type of capital allocation and risk management frameworks have been applied in 26-27 to balance dividend payouts with funding for R&D in biosimilars and specialty drugs? Any hedge against forex and raw material volatility, and any liquidity buffers put into place to sustain the profits and go for the large scale expansion projects? Thank you.
Okay, let me first take the forex part. So we have a forex policy, and we generally cover 80% or we hedge 80% of our forex exposure. In terms of raw material prices, see, due to war going on, we can see the raw material prices are increasing, the packing material prices are increasing, and we have been cautiously watching the prices, and we have been taking calls on weekly basis whether to cover and how much to cover. Definitely there is an impact on first quarter. There will be impact going forward also if the situation don't improve from here. I will not share any numbers in this call regarding how much will be the impact, but we are continuously monitoring our inventory levels, and whenever there is a dip in price, we also book for API and for packing material also, we build our inventory. But you are right that there will be some impact on account of the API prices and packing material going forward in this year. On capital allocation, we said during our last call also that Occlutech is one of our biggest investment in last 10 years, and we don't foresee any further investment into acquisitions, at least for, say, next 12 months. We want to first actually integrate Occlutech into our Alkem MedTech business, and that itself will take, say, another 12 months to do it. In terms of dividend policy, currently, I think we actually declare 25 to 30% of our PAT as dividend. In next year, since we'll be coming out of MAT, definitely the PAT, you will see that, and we have actually discussed this in few of our previous calls also, that our tax rate will significantly go up from FY27. So definitely there will, if we maintain the same dividend which we have declared in last few years, if it maintain the same absolute value, then definitely the payout percentage will go up. But we don't foresee any major reduction in absolute value of dividend. The second good thing is that we have decided to move to the new tax regime from April 26 onwards. So the past declaration, the past numbers which I have shared, that our tax rate will be around 35 to 38% going forward. So we want to revise our guidance on tax rate. The number will be around 27 to 29% going forward. So which will increase our cash accumulation also over years. I hope I have answered all the question, or is there any other?
Thank you and best wishes.
Thank you.
Thank you.
Thank you. Ladies and gentlemen, to ask a question, you may please press star and 1. Our next question is from the line of Neha Manpuria with Bank of America. Please go ahead.
Yeah, thanks for taking my question. My first question is on the India business growth. Mikasa, you mentioned that, the semaglutide launch and into priority, which should add to growth. Given that we have grown this year at close to about 10%, how should we think about growth going forward? Should we assume that growth improves further? And if you could also give us some color into how the trade generic business grew in FY26 versus the branded.
So, hi Neha, thanks for your question. I have always maintained that we will grow 100 to 150 basis points higher than the market. Now, what has happened is GLP has added to overall market's growth as well. So if the market growth, improves, we will continue our growth trajectory 100 to 150 basis points higher than the market, which is what we have achieved even in the current year. And we expect that to, happen in the coming year, as well. And definitely semaglutide will add, will play a role in, for us to ensure, that kind of growth. What was your second part of your question? Sorry, come again. On the trade generic. Yeah. So trade generic, this year we had carved out a separate entity, and during that transition, we have had certain challenges. So this year the growth has been lesser, as far as trade generic is concerned. It's close to around, 4.3%, on an annualized basis. But our focus in the trade generic business has largely been on the profitability. I have said it earlier also, we have focused on a margin improvement as far as trade generic business is concerned. So we have not chased, just top line. There are challenges in that business or in terms of the overall, receivables that can happen. So we want to focus on margin improvement as far as, trade generic business is concerned. And our key growth driver, branded generic business, where, we want to be, very fast as compared to market. I think that is what it continues. On trade generic business also, we are pretty hopeful that the coming year, our growth will be much better than this year.
Just to add, because of the sales cutoff issues, we could not deliver. So the reported growth is on the lower side.
On the trade generic.
On the trade generic side, yeah.
Understood. That's helpful. My second question is on the, cost pressures that you mentioned. Given that we don't know when the situation is going to improve and the cost pressures that you've talked about, how should we think about the margin improvement guidance that we have mentioned in the past that, we should see, 100 basis points margin improvement every year? Would it be possible for us to deliver on that? Or do you think the best case at the moment would be for us to be able to maintain the FY26 margins?
So Neha, this is, that geopolitical environment, is very unstable, right? And when we had given the guidance of 100 basis points improvement maybe every year, that is more on a more stable and a like-to-like, period. And we still believe that operationally, if everything remains the same, we would do that. In the current scenario, it's a moving goalpost. We don't know how much time, how much price variability, how inflation will play out. But I think we will continue to do things that are there in our control. We are taking various measures, whatever we can to mitigate or minimize, the risk. But yes, I think in the current scenario, it looks like whatever, we have achieved in the current year, we should be, pretty much in line with at least, that. But of course, as the quarters would progress, we will have more clarity on what kind of headwinds, would play out. And, I think by H2 or Q3 of this year, we will be more clear as to how the environment is prevailing, because anything that we predict at this stage, may or may not turn out to be true, because this is something beyond anybody. And I'm sure every business is having a similar trend, and every business is having a similar sentiment.
Sure, understood, sir. But based on... okay, no worries. One last question, if I may. On the operating costs in the quarter, I see that R&D is increased materially. We've also seen an increase in other expenses. So, any color on, is this a sustainable base of cost that we should assume? So, R&D, what should be the range as well as the other expenses?
So, in terms of R&D spend, I've always maintained our filing cycle is such that Q4, we file maximum number of products. So in Q4, even last year, we had 5% of our revenue as a R&D spend, and this year, it has been around 6.5%. But if you look at the annual spend, it will be within the range of 4 to 5% only. Even this year, we have been at 4.2%. Last year, we were at 4.3%. So it has been pretty similar, in terms of our overall, percentage. And we expect it to be a similar between 4 to 5% even in the coming year.
And other expenses?
In terms of other expenses, definitely there will be some inflationary pressures, and not only on the API prices, but on other costs also. But we don't expect it to increase. There will be increase of, I'm talking increase without, say, Occlutech acquisition, which will happen in, say, 1 or 2 months, the share transfers will happen. Other than that, the other expenses can increase by 7 to 8%, not beyond that.
See, and if your question is only on the Q4, why we have a 200 crore type increase from Q3 to Q4 on our other expenses, then, there are various heads and various reasons to it. One, we carried out some due diligences because we were acquiring, certain companies. So that has added to, that's a one-time, cost, which is featuring in this quarter. We had, foreign currency impact because even the foreign subsidiaries expenses, as the rupee would, depreciate, that adds on to the cost. So that's one impact. Then there is, some internal renovation costs, etc., which were more one time, which is also featured as part of other expenses. But as Nitin has guided, I think from a broad outlook range, you can consider it more than that.
Understood. Thank you so much.
Thank you. Our next question comes from the line of Sandeep Kumar with Clindus Research Solutions. Please go ahead.
Thank you for taking the question. Can management provide an update on the...
Sorry to interrupt, Sandeep, but your line is not very clear.
Am I audible now?
This is a little better. Please go ahead.
Thank you. First of all, thank you for taking my question. Could management provide a regulatory and launch timeline for the denosumab portfolio? Currently, I know we are in the FDA inspection activity. So how should we think about the approval and launch timeline for Prolia biosimilars in the US?
Yeah, hi. So yes, we are under approval. I think with this, I think if we are good, maybe by next quarter, I mean next year's first quarter. So there's still some time. And second thing, keep in mind that we don't have a basket yet, so we have to figure that out as well. So there could be an option where we'll out-license it to someone also. Yeah, but we're now going to launch it this year. Yeah.
Okay. So my second question is on the European market. I know we have got the approval for a Prolia biosimilar. So how we are going to tackle the pricing pressure in the Europe, and when we are expecting the submission of FY biosimilar in the European market?
What biosimilar? Last one?
Prolia biosimilar.
No, that you asked. Denosumab is the same thing. Okay. So I think that we have European partners for that. Enzene has European partners. Yeah. So the pricing pressure is for everyone. We'll figure it out how it settles.
Okay.
But yeah.
So when are we expecting the submission for Estiva biosimilar in the European market?
I think, one second, actually, we have not even filed that. No. So I think we got approval for both. So but right now we have a partner only for one. So we are not going to launch it anytime soon.
Okay. So my last question is on romosozumab of Evenity biosimilar. So we are.
So which map? Excuse me. Which map?
Romosozumab.
Yeah. What about it?
So could you please provide any insights that when we are going to start the?
I don't think so. We have that product in our pipeline.
Okay.
Yeah.
See, right now we do not have that product in our pipeline. I think at an appropriate time we can talk about that particular product. But please, be more specific. That will be my request if there is any question.
Okay. Thank you, gentlemen.
Thank you so much.
Thank you. Our next question is from the line of Kunal Dhamesha with Macquarie. Please go ahead.
Hi, thank you for taking my question. So the first one on the, what are your estimates or internal budget for growth in our various line of businesses for FY27? And on margin, I think there are a lot of pulls and push, but let's say if we kind of combine all that, there is a positive impact of currency depreciation as well. Where do you see the FY27 margin range to be? That's the first question.
Yeah. Hi, Kunal. Thanks for your question. See, in terms of our, estimates, if you ask me, domestic, I've already called out that, we should be 100 to 150 basis points higher than the market, which means that maybe a double-digit, kind of growth is what we are looking forward to. If you look at from US market, from a currency to currency, basis a dollar to dollar, we are looking at a high single-digit margin, and the currency gain would add up to that. And then if we have some new launches, that will come in the H2, they will also contribute to some extent, on our overall US growth. From the ROW markets, we have looked at a higher teens kind of market, growth, and we assume that is going to be the trend even in the coming year. So I think this is the broad outlook on the growth, that we are anticipating for FY27. I think I've already answered the question on the overall margins, when Neha was asking. In the current scenario, we have touched a 20.4% kind of growth like to like. We should be within the range of 20 to 21%, but of course, there will be a better clarity on it, considering the geopolitical situation, stabilizes, and we have more clarity on costs as we progress quarter after quarter within the year.
Sure. Thank you. And second question is on the, what is the current contribution from the medtech, and when will the Occlutech acquisition be concluded? And then when will we start seeing those numbers in Alkem's numbers?
Yeah, the contribution is less than 1% right now. Medtech is very small. And by when the deal will close, maybe in 45 to 60 days.
45 to 60 days it will get completed.
Yes, we estimate so.
Okay. So first quarter onwards, like quarter two onwards, you'll have full impact of Occlutech.
Yes, if the deal closes, yes.
Okay. Perfect. And lastly on this trade generic where Dr. Vikas highlighted that the focus has also been on the profitability. Just from a qualitative or directional perspective, between let's say the kind of business segments we have, like the India branded generic, US, ROW, where would the trade generic profitability would fit in from the let's say the chronological order perspective? I think India branded would be the highest, but then where would trade generic fit in?
We have not called out segment-wise profitability anyways, but what I can tell you is we have improved in the last few years, and now even trade generic is not very far from our corporate, margins. So, that has been our intent, and that is what, we are continuously focusing on. So that's the range, that I can give you.
Sure. Thank you, and all the best to the team, and all the best to Dr. Vikas for your new journey.
Thank you so much, Kunal. Yeah, thanks for all your support.
Thank you. Participants, to ask a question, you may please press star and 1. Our next question comes from the line of Abdul Qadir Puranwala with ICICI Securities. Please go ahead.
Yeah, hi. Thank you for the opportunity. So my first question is with regards to the revenue and the cost of Enzene and the US biologic plant what you have started. So if you could highlight that, the cost as well as the revenue in Q4.
Yeah, broadly I'll tell you, then maybe Nitin can fill in, he's the numbers man. So see, if you split Enzene into two businesses, that is India and US, the reason I'm saying that because Enzene India started much earlier. Enzene US just got commissioned last year or just few months back. So India is on break even, much more than break even. We are in early double digits, you can say teens EBITDA. US we will lose money, of course, because it takes time to ramp up. So overall, yes, we'll not be EBITDA positive. Maybe this year we'll be close to it. But I think India and Enzene US we have to see separately to be fair to it. So Enzene US will take time to kind of get a bit of break even.
Okay. And so on previous expectation what we had of at least a one-time asset turn at this particular site. So I mean, post the imposition of tariffs and more focus on insourcing, how was the order inflow at the US Enzene manufacturing facility?
I think early to say. See, these headlines are great. Everybody feels fantastic, but big companies take a lot of time. And don't forget, big companies are setting up their own capacity. So that also plays out. You have to keep that in mind. So I think it's early days to declare any victory or that one-time asset turnover will look dramatically different. Nothing of that sort has happened yet.
Understood. And so last one, just a suggestion from my end. So if, going ahead in the PPT, after completing the acquisition of Occlutech, if you could also highlight the progress of Enzene as well as the medtech business in terms of the way the assets are moving, would be very helpful.
Yeah, we'll do that. Whenever there's something meaningful to report, we will do it, sir. Thank you.
Sure, sir. Thank you.
Thank you. Our next question comes from the line of Tushar Manudhane with Motilal Oswal Financial Services. Please go ahead.
Yeah, thanks for the opportunity, sir. So firstly on, as Vikas sir moves on, so if you could, give a clarity in terms of Are we going to look for a new CEO? And then now that Occlutech is also there, where, of course, business heads are there. So if you could sort of give a overall CXO level, in terms of the changes that would happen or any new person coming up on, if you could just share.
Yes, thank you, sir. I will. So yes, we will look for a CEO. We have engaged with the top 3 global headhunter for this, and that would be in place. It would take few months, but business will go on because, promoters are completely involved. And you spoke about Occlutech and the businesses. Keep in mind that the group businesses which are non-pharma, Occlutech or Enzene, they will report to, let's say, other promoters or MD, and the CEO would be look at the hardcore pharma business. That's the structure which we have, and going forward, it will remain the same.
Got it, sir.
Yes, sir.
And got it. So secondly, coming to the domestic formulation market, if you could share the number of MRs, attrition rate, and how do you think about scaling the MRs in FY27-28 maybe?
So, I just mentioned we have expanded, some field force in the recent quarter. And, so our number of MRs at a group level is around 14,500. The other, what was the attrition was the other question, right? We are at 18 to 19% kind of attrition currently, and which has been a substantial reduction from the previous years and much lower than the industry average, that we see. So I think it's a pretty stable field force, and now with the added number of people, and large part of that addition is on the chronic side, because that's where we see, the growth opportunity, and which is what we are going after.
So, and just one on the semaglutide side, while in terms of dosage wise, we are going to be only into injectables.
Yeah. So at this stage, we have approval from the regulator for injectables, and we have entered that market. Our clinical trial for tablets, is on. We will be going to the regulator, in a while. And once we get the approval, from the innovator, we'll figure out a go-to-market strategy for tablets.
And will this get extended further to ROW or let's say non-US markets? The semaglutide opportunity.
Yeah, correct. So at this stage, we are looking at, like I mentioned in the earlier call as well, India is, showing a lot of opportunity. We want to be absolutely sure and be on top of our supply chain for domestic market. We are also working on rest of the markets, including the US, but that will be, that's not immediate. It will be in a while. So we will start our filing even for the US market. Maybe in a year and a half, we will file for US. And for ROW markets, we are just, figuring out. We will be going after it, but it will be, say, a few quarters from now.
Okay. And just lastly, I missed the US growth guidance, if you could repeat.
On the US growth. Yeah, I mentioned that on a dollar-to-dollar basis, we will be a higher single-digit, kind of growth. There will be a forex gain, that might add to that growth. And then, there are new launches, that we are looking at. So put together, I think that's the guidance that I would give on the US growth.
Thanks for addressing my questions.
Yeah. Thank you.
Thank you. Ladies and gentlemen, to ask a question, please press *1. Our next question is a follow-up from Neha Manpuria with Bank of America. Please go ahead.
Yeah, because on this high single-digit US guidance that you've mentioned, does this include the CDMO business? That would also be reported under the US revenue, right?
No, this I'm talking of pharma, Neha.
Okay, so the CDMO would be reported separately in that case?
That will be a part of Enzene. But yeah, you're right. As a geography, we report that. But this guidance is largely on the part of pharma.
And when should we start seeing revenue from the CDMO business come through, for Alkem?
So CDMO has already started for Enzene, not from the US plant that much. Last year, we recognized some CDMO from US that was like less than 100 CR, so it's pretty small. It would take time for us to get like meaningfully like 200, 300 crores. It will take us a couple of years.
And where would that reflect in the segmental breakup that we give?
That will come in Enzene.
No,
we could show it in
currently we don't share segment-wise sales or profitability, Neha. So our plan is, once it will become substantial, we'll start getting not only for our but also for Medicine.
Will not reflect it in the US business, which we talk about. Yeah.
I understand that. I'm saying that currently where is it reflected?
Yes. Currently it is part of US. You are right.
Okay, understood. Okay, thank you so much.
Thank you. To ask a question, ladies and gentlemen, you may press star and 1. Our next question is from the line of Rahul Jeewani with IIFL Securities Limited. Please go ahead.
Yeah, thanks sir for taking my question. Just on the US business, we had received approval for tolvaptan. So when, if you can talk about in terms of when could be a launch for the product, and when you launch, do you think the market would still be limited competition, or you would expect the market to become competitive at the time of Alkem's launch?
So, our expected launch is around September or October, somewhere around that time. And it's a limited player launch. It's not as crowded as some of the other, markets, other product categories that we have seen. I think as compared to those, it's a limited player launch. So it should not be as crowded as some other, as normally it happens in US.
Okay, so essentially we are targeting launch in September, October of this year. So contribution should come in second half.
Second half.
Sure. And with this tolvaptan launch, given that you are talking about, let's say, limited competition market, that would imply that the US business should grow much faster.
Sorry, Rahul, just to qualify, at this stage, we still have 4 months, 5 months, we don't know if...
Plus other things will come down, so it's the same.
What happens is on the base business, US as a market is a value erosion, that we see over a period of time. So maybe in some products, you see a value erosion that would happen, but on the back of some of the new launches, we are able to make up. So I think that is how, that's why the guidance is on those lines.
Sure, sir. And my second question is with respect to the India business. You talked about TGX business growing, let's say, 4.5% in FY26. That would essentially imply that the branded generics business grew closer to 11% last year. Now, next year...
Go ahead.
So what my question was, obviously TGX growth last year was impacted because of the restructuring which you carried out. So let's say TGX on a stable trajectory next year and we benefiting from GLP-1 or sema scale up in India, then potentially the BGX growth for FY27 could be even better than this 100-150 basis point outperformance which you called out versus the IPM.
See, if the GLP-1, really say adds a lot of value, I'm sure the market growth would also be, much higher. So that's why I've given the growth guidance relative to the market growth. So if market also is bullish and the market growth from say a 9% moves to 11%, then our growth also will be much higher. I think it will be as a guidance. I would say 150 basis points ahead of market, is fairly doable as far as that is concerned, because that is just one product category, and our large base is still, acute, so chronic is say 22 to 23% of our overall, base over there. So sometimes that weighted average plays out, but I think I will not do that calculation. I would just keep the focus clear on, are we beating the market, as far as, 100 to 150 basis points is concerned. And then, of course, the growth can be bullish.
And in FY26, you see we acquired Adroit also. So there was some incremental on account of acquisition, so which is already built in the base now.
Okay, sure, sir. And given that you touched about on the acute business, so on anti-infectives, we have seen that the market continues to remain muted, both for the IPM as well as Alkem. So any visibility in terms of when could we see some sort of a growth improvement in the acute therapies in India? So, yeah.
See, the market may have been muted, but if you look at our growth, we have outperformed even in acute. And in acute, anti-infective is muted, and that too in anti-infectives, if you would see, the struggle has been on the oral liquids as well as on the injectable side, right? If you see overall, oral solids, there have been, some growth, it has been a shade better than, so I think if you look at our growths have been, say, a high single digit kind of growth, even on that segment. But even in acute, we've say, for example, A to Z has been a great story, for us in the recent years. We are really outperforming the market. We have seen very good growth coming out of that segment. Respiratory, is growing pretty fast for us. So there are areas, pain and analgesics, we see, as a category, we have revived our growth. So if you look at, some of those segments, we are getting, good traction. But of course, when anti-infective market will come back, it is very hard for anybody to predict. That's more, it has, yeah. I mean, we would rather not predict it, and we would just do things that are in our control.
Sure, Dr. Vikas. Thank you for answering the question. I will join back with you.
Thanks.
Thank you. Ladies and gentlemen, if you wish to ask questions, you may please press star and 1. Participants, to ask a question, you may please press star and 1 at this time. We have no further questions, ladies and gentlemen. I would now like to hand the conference over to the management for closing comments.
Thank you everyone for joining today's call and for your continued interest, thoughtful questions and active participation. Should you have any follow-up queries or require any further clarification, please feel free to reach out to us. Have a pleasant evening. Thank you.
Thank you. On behalf of Motilal Oswal Financial Services, that concludes this conference. Thank you all for joining us. You may now disconnect your lines.